Good morning, traders. Richard Miller here doing a quick Tesla update, an Ichimoku cloud chart update on Tesla. In view of the recent 40%, well, almost a 40% correction in Tesla, there was a lot of panicking on Twitter, so to speak, about the sell-off, but it's not an abnormal sell-off, considering the risk profile of the stock. So just bear with me a few minutes as I go through some of the risk characteristics here. At this point in time, the Nasdaq was quite extended from the cloud, so we were expecting about a 10% correction in the Nasdaq market itself, and that translated in a 39-40% correction in Tesla. But it's not such a big panic move, because if we go and look at Tesla's beta, we look at the risk profile, we can see at the bottom left corner the 5-year the beta, average monthly beta, is about 2. That means for every 1% drop in the Nasdaq, for example, you should expect a 2% drop in Tesla. So that would be a normal price reaction for Tesla, for example. The 5-year average monthly up beta is 3.53. So once again, 1% move in the Nasdaq there would translate to a 3.5% move in Tesla, for example. We've also got the downside beta. 5-year monthly beta is 1.65. So every 1% drop in the Nasdaq, for example, you should expect 1.65% drop in 1.65 larger percent drop in Tesla. So be aware of the beta when trading. So this type sell-off, this 40% correction, is entirely normal, given take a few more percentage points. So if the Nasdaq drops, the next 10% correction, you can expect another, at least 20 to 30% correction in beta. If we look at in Tesla, if we look at the beta of the stock, for example. Now, looking and keeping these beta figures in mind, the beta to the downside, the 5-year monthly beta to the downside is 1.65. The 3-year beta is 1.64. So give and take a few, let's say 1.6 percentage, 1.6 times the downside beta in Tesla. So what does that mean? So let's say if we go back to the chart, there was a sell signal in around 8:30. On the hourly cloud chart, there was a MACD sell signal up here, on the 25th. But yeah, on the 28th, we had an Ichimoku cloud chart sell signal on the 4-hour chart. And if we look at the $830 price for Tesla, at that point in time, thinking of the 10% correction in the market, we had the back of the envelope type calculation to say, well, the first stop, based on the beta of 2, which is kind of the normal beta that we've now looked at, the first stop should be 6:30. And lo and behold, 6:30 coincides very well here with the bottom end of the cloud here. So that was the first stop. So that explains that rebound, both at a support level of the cloud, and also as a beta adjusted price target to the downside, for example. So we had a rough idea, if the market starts to sell off, Nasdaq sells off, how far can Tesla go down? And that is roughly about, at this point in time, the target there to the downside was 6:30, and we can see it literally hit this, give and take a few points. We then had the rebound, and then it continued that downside move, sliced through the bottom end of the cloud to hit the next target. So we have an idea that the downside target, 666, 630, this whole cluster here, that is a normal, this drop here is a normal correction in Tesla up until the 630 bottom in the cloud. So that was just in line with what the market's doing. It wasn't particularly extra. The extra bit of downside risk was this little sell-off from that cloud support level to the next level here, and we can see 548. That was the bottom in this cloud. Yeah, this is where the support levels were at the next key cloud chart support level. So you can see now this was a little bit extra. So that is not really explained by the beta. So that might have been a little bit of extra additional downside alpha, if you want to call it that, to that. But it's important to incorporate the beta analysis of the stock. Tesla's beta anywhere between 2 to 3.5. And if you look at the 3.5 beta, as we looked at earlier in the table, 478 would be the next downside price target, 478, and that's roughly around about these bottom targets there, 478. Which one is that? There we go, 479. So in essence, if if Tesla was trading a little bit more volatile in line with the long-term beta, or the 478, that would be spot on. So if we just go back to the beta table, yeah, we can see that 3.53 is the 5-year upper beta, 3.53. So also that explains that we had that little bit of extra downside in Tesla, just purely looking at the beta, both to the upside and the downside. So it's important to incorporate the beta analysis in your trading in terms of the risk profile. So when a stock starts to tank, I need to know if the downside potential is measured according to the beta of the beta of the stock. So the beta is just how sensitive the stock is to the overall market, in terms of a risk profile. But this is just one way to keep your finger on the pulse in terms of Tesla's risk. Now, just looking at the clouds from where we are now, when the Nasdaq rebounded aggressively 4%, 4%, the 4%. So when the Nasdaq rallied that more than 4% from the bottom of the cloud support zone, Tesla rallied about what? I think just under 20%. So measured on the upside beta, Tesla should have done at least 14% upside. So it gave you a little bit more in terms of outperformance based on the beta as compared to the beta when the Nasdaq rebounded. So that extra, the difference between the 14 and the 19, 20% rally it eventually did, that is an extra bit of alpha, so to speak, in the in Tesla's performance. So that's just important to incorporate the beta analysis in your risk profile when trading Tesla, so that you know what is a normal move and what is an abnormal move, both to the upside and the downside in Tesla. But once again, we now back above the bottom in the cloud, which is kind of bullish. As long as Tesla stays above the bottom end of this cloud, that should be bullish. Front end of the cloud is indicating that we might still have a little bit of a correction. And if we look at the 4-hour chart here, we can see that beautiful rebound here from these old cloud charts support levels 548, and that was a tremendous rally. 2/3 of that is explained by the beta, and the extra little bit of 4% that made up the 20% roughly is the extra bit of alpha, where you get some form of outperformance in Tesla. Now the risk levels, front 711 is the upside resistance zone, as well as this level here, 759. These are the upside resistance zones, and interestingly, we have that level and that level to deal with. So Tesla is going to have a bit of a struggle. It needs to get past 711, and then the next target is 759, and then the next target would be the top end of the cloud here, back at 830, and these other cloud chart levels. So, but for Tesla to be bullish, we need to be back above the top end of the cloud here, at least on an Ichimoku cloud chart perspective. But so far, encouraging signs, and it's been interesting to see that the sell-off here up until about the 630 level was quite normal, and that was in line with the market sell-off. Nothing unusual in terms of a correction. It's this little bit extra here that was slightly more unusual. And if you look at the 3.5 beta, then you kind of get to these figures to the downside here as well. So there's about a couple of percentage points to the upside and the downside that is slightly more Tesla specific. But keep an eye on the stock's beta, so that you don't get caught out by any kind of panic selling. So once again, this kind of sell-off up until the bottom in the cloud here was entirely normal, based on just looking at the relationship between Tesla and the Nasdaq and its underlying beta. Until next time, happy cloud chart trading.